There was a company called Wagr or Wagr, Wagr, and it was Bengaluru-based pet care tech. They had like AI-led 24/7 vet advice, tele-vet consultations, fitness track for whom? For pets. So basically, 140,000 pet parents is what they claim they had. And there's this company called Fredun Pharmaceuticals. Actually, sort of focuses on pet nutrition, vet health. When the acquisition happened, I think they were at about a 650 crore market cap. So it's not a very large company. It's like a small cap, a micro cap. And they've actually, I just checked before recording this, they're today at 50 crore market cap. So clearly, for what it's worth, the market doesn't think it was a bad idea. They like the consolidation of, the play they bought. And the investors in this were IVCap, Inflection Point Ventures, Staples. So there's been a lot of buzz and activity in the sort of pet care ecosystem. When Heads Up for Tails got invested into and a bunch of other, both pet supplies, nutrition, pet care, all of these have come past our desk. We don't have an investment yet in the space, but essentially we've seen a lot of these. For whatever reason, looks like this couldn't scale on its own. It's gotten acquired now, and we just found a home. Fredun didn't just buy a D2C pet brand this time. They actually bought all the technology rails they think that they can engage with pet parents. And, very recently, about 3 months ago or so, we actually covered Nestle's acquisition, a minority stake in an Indian company called Drools, at almost $1 billion that nobody had even heard of because it was not venture funded. And so I think the Fredun acquisition is a step in that direction. Clearly see that India is becoming potentially, the estimates are like it's a $6 billion pet care market, which includes everything end to end. So clearly they see the value in that, and that's the play they made. So that's the second of our acquisition stories. The third one, this company called Edureka, and this was actually a part of Veranda. And, the company that bought it is actually a global higher ed and skilling brand. It's called SNVA EduTech. It's actually incorporated in the US, and then it's been buying some of these assets, including 3 of these assets from Veranda Learning. One is Edureka, one is Veranda Higher Ed, and one is 6phrase. The Edureka business is like an upskilling platform for tech professionals, cloud, data, AI, ML security, cybersecurity. And then the Veranda Higher Ed is more a distribution arm, and 6phrase is a campus employability and skill readiness training for colleges, universities. So again, not clear what the value is, but the deal is a share swap. Veranda and its subsidiary will actually receive equity in SNVA EduTech and will jointly hold 50% of this piece of the puzzle. So it's not like only the acquisition of the assets, but it's almost like a merger of kinds that has happened. Clearly, both sides feel that this is a very accretive merger. So management is really pitching this as, hey, this is the creation of a borderless higher ed skilling platform. Of course, who are the pioneers in this? Eruditus, Upgrad. You have some really giant unicorn plays in this space. And so clearly there's ambitions of these 2 smaller companies to come together and say, why can't we be a really large company? So currently they think, the estimates are that they serve over 200,000 learners annually. The FY26 projections are greater than 250 crores of revenue and highly profitable, 60 crores plus of EBITDA. Growing at 25% on top line, 35% on EBITDA over the next 5 years is kind of how they're positioning this. We think the joint value estimate could be somewhere close to 1,000 crores. This is anybody's guess, but we're thinking 4x of revenue, 20x of EBITDA. FY26 is a good way to think of the value of this. And it explicitly positioned this merger as a path to public listing. So we're seeing, I think it's a matter of time before we see Physicswala go IPO, and I think Upgrad and Eruditus have been talking about it. Not yet ready, but it's a matter of the next 2 years. So it's amazing. The Edtech, bubble, bust, stabilization phases are all happening, and we're beginning to see more and more companies sort of become profitable, become more stable, and build towards that profitability. So we're seeing consolidation in this particular case. In this case, Veranda, interestingly, used to be an acquirer itself, right? And now it's demerging and listing its assets separately. It was the company that bought J.K. Shah, the famous CA classes, for 400 crores, and Edureka for about 245 crores, as what we gleaned from market information. So it's an interesting time. Assets were bought, assets are being divested. So lot of action in Edtech, and I think you'll see a lot more as companies move towards IPO. The sustainable, larger ones are beginning to aggregate the assets, and the ones which are smaller are beginning to realize they can't do standalone IPOs and giving into them. The fourth one for today, before we kind of wrap up and talk about the interesting banking segment, is Velocitor Solutions buying NextBillion.ai. Velocitor, by the way, is a Charlotte, North Carolina enterprise software logistics tech integrator. And NextBillion was this deep tech mapping and routing platform that built custom navigation, last mile optimization, fleet routing, live tracking. Sounds remarkably like Locus. And it happens all the time, by the way, when metal in our portfolio got sold 7 years ago. At the same time, Aspiring Minds got sold, another company got sold. So basically, sometimes you'll see an industry-wide consolidation. This feels a little bit like that. Very similar tech to Locus, getting acquired by another global player. The investors in NextBillion were Lightspeed, AlphaWave, who was also in Locus, as you saw, and Microsoft via its investing entity called M12. And from what little we know, I think they'd raised almost 32 million. They also had Mirae come in later. And so this is probably, we don't know the deal math. It's not been disclosed. It's definitely Velocitor buying out all the investors, giving an exit to the investors, and absorbing NextBillion into its tech stack. Essentially, they're enhancing its AI location intelligence stack so it can deliver even more route optimization, fleet orchestration. So yes, this is, I've always said this, software companies in India, yes, have a right to go and build a billion-dollar company, potentially even list. We hope to see more and more of that. But it's not uncommon that a global company recognizes the value of what they built, gets an India team along with the acquisition, and typically, if it finds it struggling to get to that $1 billion or $2 billion mark, sees it as a better asset, as a strategic within its portfolio, and within which it can actually serve and deliver potentially $100 million or $200 million of value, which is what we saw with Inca's acquisition of Locus and now NextBillion as well. So we covered some of their funky acquisitions as well. Fredun, as we talked about Inca's funky acquisitions of forests and things like that. Fredun has also tried to acquire in the past. They bought One Pet Stop. We talked about how Veranda was an acquirer and now is beginning to be smart about it and divest some of its assets. So interesting times for multiple sectors: pets, logistics, smart logistics, and also Edtech. The big one, which has little to do with venture capital, but a good reminder that something is afoot in terms of bigger industry consolidation, like the ability of the Indian regulator, which is the Reserve Bank of India, which governs banks, to take a more favorable view towards foreign participation in the equity pools of Indian banks is evidenced by a couple of interesting activity in the banking sector. So the big one was Emirates NBD Bank buying majority stake in RBL Bank. And so that was a surprise, because typically you don't see acquisitions of the scale that give majority control. As you know, the banking sector is liberalized to the point that you can actually buy 74% or have that with foreign investors. So if you go and look at the market cap, the share of the cap table of an HDFC or an ICICI, they're such loved private banks that you will actually see 70+% at any point of time being owned by foreign companies, foreign funds, and in the public markets. And every time it hits that peak, there's nobody else can buy into it unless there's a foreign seller. A foreign buyer can't buy. And if an Indian seller is selling, only an Indian buyer can buy. So companies reach that point if they're really, really good Indian banks. So here, to have a one-shot transaction, $3 billion of infusion to buy out 60% of RBL Bank was the move that Emirates made, effectively valuing RBL at about a $5 billion valuation. It was a tad below their last close in the public markets, but fundamentally, as I said, the more interesting element of this is the fact that RBI sees this as a good move and is blessing it in some form or fashion. The similar, I think the Emirates guys had some branches here, so whatever the little they have, they will fold into RBL. The other interesting parallel trend, if you saw it, followed this trend in the last few quarters, was Sumitomo Mitsui buying 24% stake in Yes Bank for about 15,000 crores. So these are banks which are in that 5 to 7 billion kind of valuation range, and big foreign buyers are coming and buying strategic, 10, 24, and in this case 60% of these banks. Yep, wanted to round it off with that interesting story on something which is squarely in private equity territory, but an interesting sort of milestone for the Indian banking system. We are, of course, very proud to have the first neobank that got a banking license also by way of acquisition, which was Slice buying Northeast Bank and getting rebranded as Slice. And so we hope someday we'll have news of Slice going public and becoming the first neobank to go public. And so it's an exciting time for the banking sector as a whole. And we hope to see a lot more new age fintechs becoming full-blown banks as well. I hope you enjoyed the October session of the M&A commentary, and hope to see you on the secondaries piece after this.